Hey everybody, it's Shannon from AlphaTrends.net. Today is Friday, June 3rd, 2016. Let's look at the numbers here for the week. We had mainly pretty mixed message really from the market. The S&P 500 held on to its gains that it had seen the prior week and finished with a slight gain here. The Nasdaq lost just a little bit of ground, whereas the biotechs were up 2%, semis were up 1%, and the Russell was up 1.2%. So those groups are obviously showing a little bit of relative strength here recently. And bonds had a great day as well too. So let's take a look at this on the chart action. We have the S&P 500 currently above a rising 10, 20, and 50-day moving average, and we are also above a 100, 150, and 200-day moving average. To me, that tells us we're in a long-term uptrend here still. This week we had seen that the gains from the prior week were tested, and we came down and we held above that rising 10-day moving average. And I had pointed out earlier in the week that this was going to be an important level down near this 209 area because we had a couple things happening in there. Early in the week we had the 5-day moving average was right there, and that's also where we had seen the volume weighted average price since this May 24th gap higher. And you can see that we closed above that each day this week, even after when we look at it on, let's look at a 5-minute chart. And by the way, if you're not familiar with what time frame I'm looking at, just look up in here, and if I don't announce the time frame, that's how you know what I'm looking at. Anyways, we had a gap each day this week. On Monday we had, or rather Tuesday, we had gapped up and finished a little bit lower. Then we saw a gap down on Wednesday, Thursday, and Friday, and we closed pretty much near the highs each of those 3 days. So telling us that there are buyers waiting for pullbacks. There are buyers in the wings. And next week, as long as we hold above 208.75 to 209, I think that we continue to give the benefit of the doubt to the buyers in the intermediate term. What we had seen and what I was talking about in a video on Wednesday that I posted to YouTube is that we're looking at a what's likely to be more of a correction through time, whereas some people were looking for more of a of a failure and a or a correction through price. But instead, the nature of a correction through time shows us that there are buyers waiting for what they perceive to be bargains, and they're stepping in there and taking control. That's the sign of a healthy market. The only thing that would change that in my mind in the intermediate term for next week would be if we were back below 208.75 to 209. So it's very simple. Same story with the Nasdaq. The Nasdaq, we look at the daily chart here, and as I mentioned, we're looking at what's potentially shaping up to be this cup and handle. We had first identified it over here, and we're coming up the right side of that handle now into this potential top of the cup and handle. And we've got a solid uptrend here with a rising 10, 20, and 50-day moving average. On a intermediate term time frame, we were looking at the key level for this week to hold as being 109, and we did see the volume weighted average price from this gap also tested here today, and buyers showed up once again in that area. So right now, I think that 109 is still the main area that we want to see hold next week. If we do continue to hold above 109, then I think we ought to drift higher up towards the highs for the year in the Nasdaq. The Russell 2000 continues to defy skeptics, and this group, as we've been saying, it's we see this cup and handle that is set up in here, and as it broke beyond the levels it wasn't supposed to break beyond, that is this prior support, and then this peak right here, and then getting beyond this level, you can see that the buyers are still firmly in control with that rising 10, 20, and 50-day moving average. Now, the one thing about this market as compared to the S&P and the Nasdaq is that it's getting a little bit more extended. Looking at a 15-minute time frame, you can see we still have higher highs and higher lows above a rising 5-day moving average. So it's innocent till proven guilty. I wouldn't be surprised to see a little bit of a pullback next week. And the volume weighted average price from May 24th, you can see we're well above that. And I think that even if we were to come down towards 114.50, that I would view that as just a normal pullback within a primary uptrend here for this market. And I think it would be good too, because you'd probably get a little bit of a shakeout from people who are maybe setting stops underneath this prior peak right here. So a pullback towards 114.50 would not be a reason for concern. But if we were to get below and hold below that for a little while, then things would change change, and that's why I update this market opinion each and every day for subscribers at Alpha Trends. And it's pretty cheap. It's 79 bucks a month if you're just looking for the market updates. Which, anyways, let's take a look here at the semiconductors, because this group has been really the leader. Since this rally began, we're up 7.5% year to date in the semiconductors, and this is really the one that I think is frustrating a lot of people, because the same thing. Here's our cup, and here's our handle, and we had seen that this did not act as resistance right here at that 50-day moving average, nor did the top end of that. Instead, it just continues to move higher, and the highs from late December did not hold it back either. So the semiconductors are breaking out to highs for 52 weeks, and there's nothing here that indicates, well, it indicates that they're slowing down, because you can see that the 5-day moving average is catching up to this market, and it hasn't been a pullback to the 5-day moving average. So what I still think is the key level for the semiconductors is really this 56.5 level. If we break below 56.5, perhaps we see a little bit deeper pullback, but for right now, we're still innocent till proven guilty. The buyers are in control, and it doesn't make sense to be short a market that is trending higher like this. The biotechs pulled back a little bit here today, still above a rising 5-day moving average, and the key in here is probably, let me redo that. The key in here is probably, this prior resistance here at about 276 into this area. So, it slowed down a little bit today, and as I had suggested for subscribers who were long, I was suggesting that a stop ought to go up at 283.50-ish, because it's just getting a little bit extended here, and you want to keep your stops a little bit tighter, especially as it reaches a potential level of resistance. So if we see this, the biotechs head up towards this level up in here, this 290-ish level, then I think that it's likely to find a little bit of resistance and most likely pull back a little bit. But right now, that's just merely speculation. There is no evidence that it is about to pull back or do anything like that. Shares of Apple pulled back a little bit this week, and they are below the volume weighted average price year to date. So what we had seen in there was that in Apple, we had broken below the most recent relevant area of support here on Wednesday, and then it made the lower low below that declining 5-day moving average right here. So that was the key to get out of Apple from an intermediate term perspective, and it's in corrective mode now. I think that the key level from this point going forward would be that from that failed breakdown over here, the volume weighted average price since that low where we trapped shorts in there is currently at about $96 a share. And you can see that this is a prior area of resistance as well, 95.5 to 96. I think that if Apple continues to drift down towards that level and then begins to stabilize, then perhaps we'll see another opportunity for a long side trade. But right now, it looks like Apple's just in a void. That's going to do it for me. Hope you had a good week, and I'll talk to you next week. Thanks.